Could Nvidia defy the odds and actually surge to a $4 trillion market capitalization? Nvidia's run in 2024 has been incredible, with the company briefly becoming the most valuable stock in the market. The company aims for a 700% ROI on its AI GPS, as some analysts expect the company could hit a $4 trillion market cap. Let's dive into what may be needed for this to happen, and if this target is realistic by any stretch. Let's dive in. Nvidia stock forecast. Will Nvidia become a $4 trillion company this year? Welcome to Timely Investment Research. The resilient U.S. economy and AI boom has propelled Nvidia's stock on an incredible run, recently surpassing Microsoft and Apple in terms of market capitalization and becoming the most valuable company in the world. Nvidia's rise to absolutely mega cap status has been impressive. Now, the recent sell-off in Nvidia stock has been concerning to many growth investors. For many strategies, momentum is everything. With momentum seemingly to the downside, Nvidia stock is down 6.6% over the past day at the time of recording. The question is whether capital will continue rotating into small-cap stocks, or if the mega-cap AI trade is still on. Let's dive into whether Nvidia can hit a $4 trillion valuation this year, or if that sort of target represents very wishful thinking. 700% on GPU AI bodes well for Nvidia stock. In June 2024, Nvidia briefly reached a $3.34 trillion valuation, nearly doubling its value since the start of the year. Although it fell behind Microsoft and Apple, many in the growth investor community expect the company to once again reclaim the top spot. At the Bank of America Securities Conference, Nvidia's Ian Buck said every dollar spent on GPS by cloud providers yields $5 over 4 years, with even greater returns of $7 for inferencing tasks. Nvidia has optimized its products to meet rising AI inference demands through Nvidia Inference Microservices, supporting models like Llama and Mistral. The company highlighted its Blackwell GPU for inferencing and energy efficiency. Nvidia also introduced the Rubin GPU, set to launch in 2026, emphasizing early collaboration with cloud providers. Ian Buck noted the significance of this teamwork for data center development. Despite promising advancements, Nvidia faces potential antitrust scrutiny because of its rapid growth, complicating its path toward a $4 trillion market cap. One analyst says it could double. Nvidia's growth is just beginning, according to veteran investor Eric Jackson. He predicted the company's market cap could double to $6 trillion by year-end, driven by strong earnings reports in August or November. This outlook hinges on continued demand for H100 and H200 chips and the potential of the new AI-focused Blackwell chips, echoing Nvidia founder Jensen Huang's earlier insights on demand trends. If Nvidia's earnings meet expectations, Eric Jackson believed investors would accept a significantly higher price-to-earnings multiple. Currently trading at a forward price-earnings ratio of about 50 times, Jackson suggested the stock could rise to $250 per share if it reaches 65 times forward earnings. Nvidia shares were priced at $131 per share, reflecting over 170% growth year-to-date, marking another milestone year for the company. Be cautious, but optimistic. A $4 trillion valuation certainly isn't out of the question for Nvidia if the company can regain the sort of momentum that propelled the stock higher this year. A few more quarters of rip-your-face-off earnings beats, and the hype train could easily accelerate once again. It's important to remember that it would only take a 30% move higher for the company to achieve this valuation, and that's entirely possible if the company can blow out earnings and forward multiples get adjusted higher once again. The thing is, in this market, valuations are starting to matter. And it's true that Nvidia's valuation is becoming very stretched. I think taking a cautious approach to putting new capital into this name makes sense. Investing over longer periods of time via dollar cost averaging may be a better approach than betting the farm on this name right now, at least in my view. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.